Sanjiv Bhasin as well with us on the show. Sanjiv, hi there. Good morning. Good to have you on board. So much to chat about. Why don't we start out with your outlook on the entire IT space, given the latest reports coming in from Morgan Stanley. They're talking about, margins and double-digit EPS growth, that overall aiding valuations for the sector and a very strong outlook by and large for FY25. You agree?
Yeah, good morning. So, Avan, I think the opportunity lay 3 months back when you could get HCL Tech closer to 1100, or maybe we picked it up at 950, or a Tech Mahindra closer to 1050. We are overweight Tech Mahindra and HCL Tech. Persistent has been our star player in the whole basket, but we remain focused on these three stocks. You can add a GoFort because now there is no promoter, and sooner rather than later you could hear some corporate development. But yes, it has a proxy of a tailwind of a weak rupee. And I think that most of the headwinds regarding bonds and others are getting slowly priced in. You cannot have bond yields at this rate and stocks where they are. So the markets are actually pricing in that the Fed will turn bear, dovish faster than you thought. And I think the bark is always worse than the bite. So yes, we are overweight HCL Tech, Tech Mahindra, and Persistent. We've added GoForts in this decline.
All right, fair enough. That's the view coming in on the entire IT space. What about all the action in the primary space then, in the primary markets, Sanjeev? Day after day, there's one new listing after another. Is there anything that's caught your eye?
I won't be able to comment on that, Avan, because our secondary market team has a disclosure on some of the IPOs as a part of that. So I won't be. But it's also, let me tell you, that we all expected that the froth was on the market at 20,000, mainly in the mid caps. But lo and behold, mid caps are making new highs. So I think the folly of the market falling was much overdue. But it's just because of Reliance and HDFC Bank. Most of the other stocks which we own, PNB, Maruti, HCL Tech, or a Hero, are all hitting new 52-week highs. So don't miss the woods for the trees. I think these last 2 days are an opportunity. This inquiry can be volatile tomorrow, but I think all the pain is in the prices now. So like you pointed out, there could be a little bit of froth on some of the IPOs, but who's to question that? The under ownership of equities is now coming to the fore, and people do want to get onto good stocks and good peer groups. I won't be able to comment on any of the IPOs, but I think there are a lot of pedigree stocks or peer management which are reasonably well priced, which can make money for the initial investor.
Well, SGX is indicating that we are down by 63 points, but that is something which is par for course. But in SBI Cards, the card business is growing at 30% for the industry, 40% for SBI Cards, but the stock is down 1% this year. Why is this obvious bet on consumption being ignored by the market?
Yeah, good point. Good morning. So Nikunj, that's what we are trying to tell. When we've added SBI Card in the last 3 years as a disclosure, we think the risk reward is very favorable. And there was a brokerage note which said that we'll go overweight Paytm and underweight SBI Card. You cannot ignore the prevalence of credit card and the way they are expanding, and SBI Card, particularly the way it's gaining market share at the cost of both HDFC and Axis. I think it's a no-brainer. So I'm very, very bullish on this stock. And I see actually 4 digits coming in this stock, maybe by the end of this year or maybe more. So there's a 30% upside easily on the card, and the earnings and the gain in market share is purely coincidental with that. Nikunj, there is a little bit of underperformance in select stocks, mainly due to the expiry and some of the correlated where people are switching into the fintech stocks. But you cannot have a country which is least penetrated by credit card not see growth over there, and these guys make money hands over fist. So SBI Card, top pick over there.
Okay, that's the take coming in on SBI Cards. Let's take stock of what was holding up in the market. Actually, nothing much. While, yes, there was an iShares which looked good. You did have some, sporadic action within some of the other F&O names as well. But not much was actually moving up in the market. Having said that, let's just take stock of not just the credit card spends, but maybe stories like Aditya Birla Capital as well. You know, we just flagged off the Jefferies note for you, the fact that they've initiated coverage. It's a target of 215, and they believe that the company is poised to double the profits in the next 3 years. They say that they're going to capitalize on the wider network, the higher cross sells as well. The NBFC can gain from the MSME lending opportunity as well. Sanjiv, I don't know if you're tracking Aditya Birla Capital. Would you have a view here?
Aisha, go back to 1 year back, and we were one of the first investors around that 110 rupee level. And we always felt that the business was humongous, but the opportunity lay in the price. The stock did nothing. And lo and behold, once you had a change of guard at the helm, and that lady from ICICI Bank came over and all guns firing. This has been a dream of a stock. So as a disclosure, we hold this, and we are no plans to sell this. We think this is one of the most underpriced NBFCs, and given the pedigree of the Birlas and the new helm with which this the new chairperson has taken over, this stock is definitely headed higher.
Okay, that's the view on AB Capital, but time to put the spotlight today on the stock that is on the editor's radar. And we're discussing Maruti, and interesting as well, just mapping out the overall valuation, where it stands compared to its 5-year average, and what the key growth drivers are with the festive season as well approaching.
Savan, okay, we look at the 5-year average, 28 times. But will the next 5 year be better than the last 5 years? What do you think?
With Maruti, yes.
Because there was the last 5 years,
growth drivers,
there was COVID.
Yeah.
See, please remember there was COVID, and then there was this huge disruptive force which was at play, which is that Maruti lost its mojo.
Was right.
See, Maruti lost its mojo because of SUV.
Yeah.
Mahindra and the Hyundais of the world, they came back and they really, and you know that what's happening in the SUV market now. So Maruti moved late, and they were never EV ready, and as a result the stock lost its mojo. But now they're gaining market share back in the SUV market. There is visible recovery, I think, in the tier 2 city, which is what I think we are talking about, that okay, this K-shape recovery is all great, but now the extremes of ultra luxury and ultra rural, I think, is also getting contracted. So you're seeing a mild recovery. Interest rates, when they go up in a jiffy, they act as a shock. But when they stay where they are, then the system accepts it. You know, that's the new normal, like we say. So I think interest rate adjustment, I think that is over. You may argue back and say that right now the inventory levels what Maruti has stacked up, that is also a clear indication of how they see demand moving higher. So in the near term, there's a valuation comfort. There is a bit of a change in strategy in terms of the fact that they're acknowledging and admitting that we need to reboot our SUV market space now. And then sometimes I think this time around, because you have a delayed Diwali, and you will have a long festival season, I guess the impact of that really would be visible. So this impact of high raw material prices, high interest rates, that macro challenge, I just get a sense is behind Maruti now.
Okay, so hopefully now the next few years should be better for Maruti, going by all of these key triggers, Aisha.
Okay, 10,556. Sanjiv, your take on Maruti. Should one be looking at adding positions or even buying afresh in their portfolios?
Aisha, it's so uncanny. You are asking all the stocks which I have covered, and I have been bullish on 8,000, 8,200. I was sticking my neck out at Maruti. By the way, my office is right next to their entry plant in Gurgaon. And, last year they sold 17, 18 lakh cars. This year they have an order book of 35 lakh cars. And I could make out by the sheer, language of the management that they are not bullish, but extremely bullish. And given that they've, adjusted to the new hybrid and the EV model which they are launching, Maruti may even cross 12,000 in this coming year. So yes, if you don't own it, and forget about the hogwash of high oil prices and XYZ, because the demand and the festive season all will add to that. Yes, that is a little bit of a headwind, but in the end, it's the mass sale which we are talking of and the adaptation to new models. So thumbs up to Maruti, and 12,000 definitely on the cards.
Okay. So, but since I'm own Maruti, मतलब Maruti की गाड़ी है Maruti का stock?
नहीं, मारुति की गाड़ी नहीं है निकुंज जी. वो जब मैं काफी यंगर था तब थी. अब मेरे पे हाँ मारुति का स्टॉक तो है मेरे पे, और मैं काफी सालों से होल्ड कर रहा हूँ, और अभी कोई इंटेंशन नहीं बेचने का. इस एज पे आप अच्छे शहरों में रहना चाहते हैं.
Age क्या sir? Buffett has made his killing in Apple after he turned 80. So in stock market, age is not a barrier.
Exactly. And 60, I feel like 30 and raring to go. So it's all in the mind. Nikunj, age is just a number.
What do you want to comment on Maruti, age, stock of Maruti, the car you own?
I didn't get that.
No, I was asking Nuresh, since we're talking about age and we're talking about Maruti stock, they both are very close to Nuresh.
Both of the views are interesting. To be as emphatic as or as strong as Sanjeev ji on age being 60 to 30, and Maruti also, the stock has finally crossed 10,000 after 5 years. So hopefully the trends are changing here as well.
You know, Kunal, Maruti is not like this bombed out stock. It's a how much? Let's look at the YTD change. I think YTD change is in double digit.
Yeah, 25-26%.
25-26%. It's done reasonably well. So whatever superlatives me and Sanjeev Bhai are discussing, some would argue back and say that, okay, we know it. It's not that it's a bombed out stock. It's not like a contra buy.
It's not a contra buy, but it was an underperformer since last 2-3 years. And finally, I think this year, so far, the last 3-4 months specifically, the stock has seemingly found its mojo back. So, you know, it consolidated in a band of, I think, 2,000 points, approximately 7,000, 7,500 as a support broadly for Maruti for the last 3 to 4 years. So this seems to be more of a turnaround year for Maruti, and I would probably agree that this may not just be a short-lived rally for the stock price, because when you see such kind of a strong breakout after multi years of sideways correction, the stocks, they tend to start a new phase of rally for themselves. So I would be bullish on Maruti, and on a gradual basis, I would probably expect 11,200 as an immediate target for the stock.
There is a buy report from CLSA on Tata Com, and they are talking about an outperforming rating. There is another report from Jefferies on HDFC Bank, and they're saying the obvious, that keep the faith, keep the faith, keep the faith. So, Naresh, keep the faith, I think, is the word for HDFC Bank. The problem is that when you keep the faith and when you see rest of the market moving higher, and for those who have limited capital, they are feeling what could be called as FOMO when it comes to HDFC Bank, because you're not participating in any other stock.
So what has happened with HDFC Bank is now it has become a port of call for a lot of people who want to keep cash, or those who want to have a stock and be a little more defensive. And say the number of people recommending HDFC Bank has increased because there is a lot of faith on the stock. But what we've seen is when stocks go into sideways zones, the large cap ones, they go for multi-years as well. We've seen what happened with Reliance between 2010 to 2018. We saw 2013 to 2021 for ITC. And that's the reason where it is scary that how long does it stay in the range. And the point is whether you buy at 1,500 or 1,400, you want to be buying when the trends have changed. So I would rather wait it out for months together. But the fact is the stock has gone sideways for the last 2 years, 2.5 years. And a lot of correlations have broken. So this is the lowest price to book, etc., which used to never happen for the stock. Those are generally an indications of underperformance going forward. So we'll be more, say, skeptical in terms of the stock unless and until we start taking a price action which is very strong. So for now, it's a stock which could remain sideways for much longer than what we think.
HDFC Bank 1537. We discussed the stock perhaps on a daily basis. Kunal, stocks, defense stocks, power stocks, haven't discussed them in a while. Is the party over? Is the bull market over?
I would not say bull market is over, but the fiercity of the trend is definitely slowed down for these stocks. So from a point when these stocks were up 20-30% in just a matter of 1 or 2 weeks, we've now seen that these stocks are down 20%, 25% broadly in the last 2 or 3 weeks from the point when these stocks topped out. And the bounces which is happening into the stocks, for example, the likes of REC, PFC, they are not seeing an extensive amount of volumes like what they had seen prior. So which means that the participation levels have definitely dropped down. Traders probably are using the mild bounce or the pickup of price action as maybe an opportunity to try and reduce their positions or trying to cut back into the long stance into these names. So I would probably expect that this will just be a process for at least another 3 to 4 weeks, if not more, for these stocks. Because after such a kind of a steep rally into many of these names, you're bound to see a time-wise as well as a price-wise correction. As of now, we've seen price-wise correction kicking in, but the time-wise correction I think could probably play out for another 3 to 4 weeks. So I don't expect too much of any extensive kind of a price action into these names. Yes, there would be those periodic bounces in between, but netted when we look at this from the August-September highs for these stocks, they could broadly correct by at least 25 to 30%.
One of the key movers yesterday in an otherwise quiet market was Dixon Tech. Let's just bring up the intraday chart from yesterday. Of course, there was a DAM capital note as well, initiating a buy on this one and setting the target price all the way to 6,000 rupees per share. They see further upside potential clearly from the current levels, and they're very, very bullish on this one. They're saying that the consumer durable goods market is extremely strong. With the festival season now approaching, they see pretty much a lot of traction, also strong traction of ramp up in mobile manufacturing, and thereby they were considering this buy. Also saying that the company is participating in the government's production-linked incentive scheme for IT hardware. That's the PLI schemes as well. So all in all, they're very, very bullish and upbeat about Dixon Tech. Sanjiv, what levels do you see on Dixon Tech in the near term?
So Aisha, let me make a disclosure. In the last 4-5 days, we've had some select clients who've done a sip in 5 stocks. Top amongst that is Dixon, and they are very, very bullish. Now, these are certain clients who are informed investors. So Dixon, Geo Finance, SRF, HDFC Bank, and SBI Card. These 5 stocks, as a disclosure, we have been buying in the last 4-5 days, and we intend to buy for the next 10 days. Notwithstanding, I think Dixon has run up quite a bit. And now when you get this, news that there will be a little bit of a lag before it becomes a Make in India theme and so on. But I think this shift towards electric manufacturing, EMS, is very, very much there. And if you have a 1-2 year horizon, you can't go wrong. The promoters are the erstwhile Western group who had a pedigree, or who have a very good background in this till the TV franchise went out of fashion. But I think this is a stock worth investing. Only thing is, you will have to keep your horizon slightly longer, because a large part of the rally may have already been in the price. So the price may not be in your favor, but the business is surely in your favor.
Okay, fair enough. Stay with us. Lots more stocks to discuss. But in the meantime, we've got Dmart ready, which continues its dominance. It's actually retaining a competitive advantage compared to its peers. Let's understand what exactly is helping this performance. We've got Vinny, who tracks the sector closely and now joins in with the details. Vinny?
Good morning, and absolutely what we're seeing is that Dmart Ready is actually managing to sustain in terms of the competition, and they have a big competitive advantage whether you compare it to a Big Basket or a JioMart. Now, the gap between Dmart Ready as well as Big Basket has increase in terms for most of the products in the month of August versus when they had compared in the previous couple of months in the beginning of 2023. Now, Dmart continues to remain the most competitive in terms of a non-quick commerce segment, and that is led by increase in price gap between Dmart Ready as well as its competition. Now, this is what Prabhudas Leeladhar is highlighting. That carried out a channel check which is suggesting all this as well. Now, in terms of specific segments, also when you look at it, loose groceries, that's seen a bit of an inflationary pressure which is more visible when you compare it in terms of Big Basket versus a Dmart Ready or a JioMart as well. Other than that, dairy prices, they have remained quite stable. Mixed trends in terms of the price gap that is seen. Personal and hygiene care segment, they are seeing that Big Basket has seen a significant gap increase versus Dmart Ready, and JioMart has gave a 5% off in terms of the discounts or offers that were there. They give a 5% off in terms of the bill value, which is higher than for products that they purchase higher than 1,500 crores in terms of groceries, as well as while they had a discount offer of 10% in terms of cards for selective banks as well. While in terms of Dmart Ready, they had only given some offers during the Independence Day. So that is how the retail space is shaping up. Surely Dmart Ready seems to be at an advantage compared to its peers.
So thanks very much for giving us those details. Sanjiv, just curious as to where you stand within this space. Avenue Supermarts, do you believe that the game is looking strong for this stock?
Yes, I think it has been a very, very big market gainer. But, Aman, the stock has done nothing much. We own Trent, and we think that their, gain as far as Chroma and other brands has been far more under published than actual achievement. And Dmart, for any reason, has been an underperformer for stock. So we continue to remain with Trent. Like we said, we've added Geo Finance. We think that as a proxy. And why not Reliance? I think Reliance itself will see the record sales as far as retail goes now in the coming festive season. Distill exports from Russia have actually almost stopped, which means distillate O2C chemicals will see a very big gain for Reliance in the coming few quarters. And I think at this price, Reliance fits the bill perfectly to buy a retail come OTC business with Geo again. Now a price hike on the on the telecoms also being on the card. So I would be more bullish on Trent and Reliance. Dmart may be a very good business and market share, but the stock is underperformed for some time.
Yeah, that it surely has, right? I mean, it's one of those HDFC Bank kind of revered names which has clearly underperformed. 36.32. Kunal, the historical charts on Avenue Supermarts and what you now foresee going forward to?
So yeah, the stock had underperformed for last 2 years. From 5,000 odd levels, it had corrected to 3,000 odd mark, 3,200 odd levels. But then I think the recent recovery is also indicative that this 2 years of glut in the stock price where it corrected very sharply after that steep run the stock had seen post IPO, I think that mean reversion has happened. So both time-wise and price-wise corrections have happened for Dmart. It's confirmed a breakout above its 200-day moving average in this recent leg of rally, which the stock had not shown in the last many months prior to that. So that also is an indication of a possible change of trend for Dmart. I would be extremely bullish on the stock, and my expectation is that in the next 12 to 18 months, the stock should surpass the previous size of 5,000 plus.
Okay. Not in for a great start, but let's look at the global setup here. And why it is important is that if you frankly look at Indian markets at 20,000, we did not even touch 20,000, 21,000. So from 20,000 to now, it's not been even a 3%, 3.5% reversal. But at the same time, Nasdaq in the month of September down 7%, Dow down 4%, S&P down 5%. Now these are serious reversals. We're just not talking about it because you're not feeling the heat right now. But the bottom line here is that India is outperforming. We did that for 2022 and we are again doing that in 2023. Yes, when global markets they get jammed and when there is a linear downturn in the global market, you will hit a pause button and then markets will consolidate. So the next trigger could be earnings season. The next trigger could be something from the monetary policy, update on the festival season. But this market is not going to be sinking into a deep correction even though global markets have reversed. So global markets, they act as a tailwind and adds to the market momentum. When global markets are bad, because what the positioning of the Indian economy is and what the underlying current of valuation is, that headwind will not be very nasty. It's not going to sweep you away. So yes, don't make a bearish view just because global markets are down. But you got to be careful when you buy and how you buy. We'll talk about it. But in general, the mood point right now seems to be, oh, Nasdaq is down 7%. Will a deep correction in Indian market started? No, sir. I don't think that's going to happen. We've seen that in 2023 as well. There you go. Look at Nifty. We are handsomely outperforming this global fall. And that's the truism, Nuresh, isn't it?
That's the fact. And if you look at US markets, they've been sideways. And even if you look at the index, it gets beyond the index, the small cap indices in US are at much more lower levels. It's just the top heavyweights doing better over there. Otherwise, the market has been in a much deeper correction. So the outperformance is very clear in Indian indices. And this is not the first time. We've seen those phases multiple times, whether it was a few years back in 2015-17 or in 2004-7. So right now, the viewers go with the price action. The drift is there in Indian indices, but it does not look like we are going into much deeper correction. We've corrected from 20,200. The cases we go worst case towards 19,200, 300. It's only when we start breaking that we change the view. So for now, the bias is positive. Broader market action is positive. Corrections are part of the longer term trend and the longer term trend is up.
Okay, that's on the trend that we're seeing in the markets right now. Let's move away from the listed universe. And Zerodha posted a very impressive fiscal year 2023 results with revenues surging 38% all the way to almost touching 6,900 crore rupees. Their profits also have jumped up a good 39%. Let me take it across to Sharad and get in more details about where exactly are they seeing the growth. Sharad?
Well, yes, a strong set of numbers coming in for FY23, and Zerodha has reported its financial. They've stated almost a 38% jump coming in the revenues of almost 6,875 crore rupees. And also looking at the PAT, the numbers have gone up by almost 40%, coming in at almost 2,900 crore rupees. Now, the important statement coming in from the management, Nitin Kamath, CEO at Zerodha, he had stated a very cautious tone coming in. He said that there was a phenomenal growth seen in the years FY22 and FY23, but that said, the business has plateaued in terms of revenue and profitability in this current financial year up till now. Now, this was stated in the blog post itself. So there is a cautious commentary coming in, but overall the numbers were actually impacted because of a higher F&O flow numbers, and this is the largest retail focus brokers and have the asset base of roughly 3 lakh crore rupees. Now, the bulk of revenue coming from the F&O segment, and if you look at another set of numbers, is they have roughly 63 lakh active clients in the month of August, and the management had stated that roughly they are adding 2.5 lakh new clients each month.
Right, we'll leave it at that, Sharad. Thanks for highlighting what Zerodha, only wish it was listed. But yeah, phenomenal numbers coming in there. Sanjiv, reminds me so much, new paper hitting the markets. Any of the recent IPOs that you've, recommended a subscribe on? And, in particular, I wanted your take on JSW Infra too.
So, Aisha, I cannot comment on the new issue since our secondary market team is a co-manager to some of them, so it's not in compliance. But I'd just like to stress on one point which Nikunj made, that the Nasdaq is down 7 or 9%. Actually, it's Apple, 198, which is down to 174. And just like Reliance and HDFC have so much of weight, Apple on the index has a lot of weight. So yes, the pain is there on the Nasdaq, but it's large to do with 2-3 large cap stocks like Apple and a Microsoft. Similarly, in India, can you believe last week we had 500 million inflows into HDFC Bank, which took it to 1670. And this week, you've seen 500 million outflow. So I think the best play is buy HDFC Bank at 1535 and next week sell it at 1650.
Right. Okay, just to highlight for our viewers, lots happening in the primary market. You've got JSW Infra, Updata Services. They're going to be closing for subscription today. JSW Infra, by the way, the total subscription figure stands at 2.1 times. And for Updata Services, it's 0.16 times. You've got two listings as well today. You've got Sai Silks, which got a total subscription of 4.5 times. You've got Signature Global as well, which is listing today. Total subscription was 12.5 times. And then you've got Valiant Laboratories, which is an IPO size of 152 crore rupees, so smaller in that sense. And the price band has been set at 133 to 140. That is going to be opening today for subscription. So lots of primary market activity coming your way. That said, let's just take stock of what else is going to be, in focus this morning. We flagged off SBI cards and how the credit card numbers have actually jumped up on a month-on-month basis. Eicher Motors, wherein Jefferies maintains their buy, they've hiked the target price to now 4150 from the earlier 4000. That was one stock which was very, very active in trade yesterday as well. Kunal,